Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TRADINGView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. Today, I want to give a full breakdown of Euro and GBP because it is a pair that is very interesting for a trading opportunity next week. So I want to speak about the full situation that currently we have both from a technical and in order flow perspective to see exactly what kind of opportunity we can be currently looking for on this pair. Now, as usual, the way in which I will be performing the analysis is first from a technical perspective. We will then go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market. And by putting together these two different types of analysis, so technical and order flow, we will understand exactly where are the best probabilities for a trading opportunity on this pair. Now, as usual, the analysis will be as educational as possible so that you will learn some very important concepts when it comes to trading in general to be developing a proper strategy. Now, let's start our analysis from a monthly perspective. Now, on the monthly, what do we have? On the monthly, we have a market that clearly at the moment is testing a very strong monthly resistance area. In fact, this zone was a very strong resistance here, again here, again here, again here, and again here. And the market has been testing and rejecting this area to the downside very aggressively multiple times. And with the very last test, what did we say? We said we would like to see the market create a deeper retracement. And that is in fact exactly what the market has been doing lately, rejecting quite aggressively the previous resistance, which is now again turned resistance here. So on the monthly situation is quite clear. Extremely strong resistance that just rejected the market to the downside. Let's go down on the weekly and see what we have from a weekly perspective. Now on the weekly, we can see that the market had tested the resistance the last time from a weekly perspective, creating this overextended W formation. Now in general, after an overextended W formation, what you want to see is the market create a move to the downside. Specifically, you would like to see the market retrace overall to the neckline of the formation, which is the previous resistance, which is now turned support to complete the pattern at the last possible target, which is exactly the neckline. And in fact, that is what the market did. The market created from here a nice move to the downside to complete the pattern at this previous resistance, which at that point is turned support and obviously is the completion zone of the pattern, as I have just explained. So the market has just completed the pattern, started to reject the neckline, however, then broke it to the downside with this weekly close below the area, went for a retest of the new support, which is now turned resistance, and rejected it to the downside. So on the weekly, what we actually have is previous support, now turned resistance, which the market tested and rejected to the downside. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do this, we can see that the market was respecting the 0.618 of the Fibonacci taken on the impulse, which is the golden ratio. So a level that usually you always expect the market to actually respect. So the market was testing that 0.618, it rejected it to the upside multiple times, and then it broke back down with this quite strong impulse. At that point, this previous support is turned resistance here. The market broke it, went for a retest, and started this quite strong rejection to the downside, rejecting this previous support, which is now turned resistance, as I have just explained. One last thing that we can see on the weekly before we move down on the daily is that the market has currently created this candle here. Now, when you see a candle like this with a very long wick and a red body, what you usually expect is the next candle to fill in the wick. So what we can expect next week is for the market from a weekly perspective to create a move to the downside to at least fill in this wick before a possible rejection to the upside. Because let's not forget that at the moment we do have structural support at this zone. The reason for which the market created this wick in the first place is because all this zone here is a quite strong weekly demand area, which was acting as quite strong demand here, again demand here, and currently again demand here. That is something very important to notice. So on the monthly, we have resistance and the market has rejected it to the downside. On the weekly, we have bearish structure. However, we have just rejected a weekly demand area. Let's go down on the daily and see what we have from a daily perspective. Now, on the daily, situation is quite clear. First of all, as I was saying earlier, we spoke about Euro GBP quite a few times in the past. We spoke about it when the market was here. I made a full breakdown explaining all the reasons for which from here we wanted to see the market create a nice move to the downside. Then I spoke about Euro GBP again when the market was here and explained all the reasons for which we wanted to see a nice move to the downside and break below this support, which at that point would have been turned resistance. And then we wanted to see a retracement before the continuation lower, which is exactly what the market has done. And then again, I made another breakdown of Euro GBP after the market had provided this overextended M formation. And I explained all the reasons for which from here we wanted to see the market create a nice move to the upside. And again, that is exactly what the market did. And I will link all this previous analysis in description. So you find it all linked below so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pair you would like me to cover for a trading opportunity in next video. But at the moment, what is the situation and how we can be looking to capitalize on the next move for this pair? Now, at the moment, as we have seen on the monthly and weekly, we have some contradicting scenarios. On the daily, what we have is a market that is currently inside of this previous support, which is now turned resistance and has already started to reject the zone to the downside. However, at the same time, what we also can see is that we have some support here, because here the market had found this support to create this rejection to the upside. So currently on the daily, we are stuck in between the previous support turn resistance and the support here, which is now again support here. And until the market will remain inside of this zone, it's definitely not good to be looking for opportunities, because the market is clearly bounded and stuck in between the resistance and support. So how we will be approaching this kind of situation with students? Now, let's first go and give a quick check at what we have from a COT perspective. So commitment of traders, so what hedge funds are currently doing in the market. Now, from a Euro perspective, what we can see is that with the last report, hedge funds have actually closed 9.2K long positions and opened 6K shorts. So from a Euro perspective, the move to the downside that we have seen on Euro GBP was definitely expected, because we didn't have a strong Euro. Actually, we had a quite weak Euro with all the profit taking that was going on. In fact, we could see that clearly hedge funds were closing a lot of long positions. So definitely we didn't expect Euro strength. We actually expected a nice move to the downside to be possible on this pair, which is exactly what the market did, rejecting the previous support turn resistance as we wanted to see. And if we go and see what we have at the moment from a pound perspective, we can see that we did have with the last report 4.0, almost 4.1K long positions getting closed and almost 500 shorts getting opened. So bringing longs at one of the lowest values that we had so far, and 38K shorts. So only 27K longs and 38K shorts. So the pound was looking quite weak. However, this is all the last report that we have available. However, we have a new report which is coming out today, which definitely should help us understand the situation that we currently have from a Euro GBP perspective. In fact, as we have seen on the weekly, we do have the candle, which the next one is supposed to fill in the wick. So what happens usually in this kind of situations is that the market will first give us a move to the upside, then break back down. If that will be the case, then we will have a nice M formation and we will be using that to be looking for a nice longing opportunity with students. But that is something a little bit far away from the reach that currently the market has. The way in which we will be actually approaching this kind of situation with students on Euro GBP is quite simple. Inside of this area, if we will see with the new report that hedge funds have added longs on the pound and added shorts on the euro, what we will be doing with students is inside of this area, we will be monitoring price action from a 4-hour perspective. And we will be waiting for the market to shift from a 4-hour bullish market as we have right now, because at the moment everything is bullish and the market can easily and actually should continue to the upside. So we will be waiting for the market to shift from the bullish situation that we have right now to a bearish situation. And only when the market from a 4-hour perspective will shift from a bullish to a bearish market, only at that point we will be adding Euro GBP to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities for the move to the downside and for the market to at least try to complete this impulse correction and impulse pattern to the downside. But we have to see proper confirmations from a COT perspective and also on the 4 hours. Why on the 4 hours? Because always remember, monthly, weekly, and daily combined with the COT data are the best time frames for the direction of the market. But the best time frame for confirmation and entries is the 4 hours. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.